All right, we're gonna be going over what I see for the upcoming week ahead and what we got going on this week. I have the hiccups right now, and it's really pissing me off. So we'll try to just survive. So basically, on the daily chart here on NQ, I'm gonna be bullish, especially after yesterday. It seemed like when we were trading, where were we? We were right here, and I was assuming that we would go higher off this point. Yeah, I'm going to be hiccuping like that, I guess, it seems like. I assumed we'd be going higher, right, seeming off of this liquidity sweep right here. But we didn't actually do that, right? I was looking at this inversion fair value gap, but we traded lower, and we ended up taking out this sell side liquidity. So I'll try to keep this short by not going into too much, but I would be bullish off of here, looking for a continuation, right? So I'd be seeing this as the C2, right? Our continuation. Oh, this should be our reversal. And then this is our C3, so our continuation right here. And I'm looking for a continuation again. So what that would inherently look like is on this, let's 1 second. On this daily chart, I'm going to put up the fib, and we're going to track from bottom to top. I'm looking for that discount not to be traded into, right? So, sorry, wait. It's like when you have the hiccup, you always feel like a hiccup coming, and you're anticipating it, so you're kind of scared. You're scared that you don't want to hiccup, right? Basically, I'd be looking for us to trade within here to create the daily wick, the low of the day, and then my what I'd be looking for to be traded into is this sell side or this buy side level right here. Not an unmitigated fair value gap. You know what it is, whatever it is, right? So we'd be looking for the wick to form right here, and then that to trade higher. Now on ES, what do we look like, right? Same sort of idea, right? We'll be targeting that level. We have that change in state of delivery, as you can tell right here, with us closing above these down closed candles right here. So just looking at it, I would be looking for price to trade into this fair value gap, although that is already mitigated. So we'll just see. But the main idea here is we're looking for going into tomorrow. The premium level of this wick to be respected to the upside, and that's where we create the low of the day. So going into that, now moving on to YM. Obviously, you can see that there's like a complete switch in the candle formation, right? So compared to ES, where we have a huge candle higher, but that's because YM's always been relatively kind of moving different, and today it definitely did, as YM was trending lower when the indices NQ and ES were trending higher. My dog's here. Hi, Bentley. Hi. He wants me to stop, it seems like. But he's licking my phone right now. Thanks, buddy. Yeah, but I would be seeing this as something that would trade higher here, right? Using that as if YM or today traded a lot lower and was trending lower as the indices were trending higher, right? Then my dog is sniffing my breath. He is literally kissing me. Bentley, go do something else. I love you. All right. So then I would assume that if it's not going to close green, right? Because most of the wick was used on that expansion lower. For whatever reason that was, I can't really put that into reasoning, right? But if it closes here, it closed bullish, but just barely, as you can tell. Well, I'd be seeing that as a something that would expand higher tomorrow. So what I'd be looking for is similar, but also different. I'd be looking for 0.5 level of the wick to be respected to the upside. And the reasoning for the switch is just because where we close and we leave the wick up here to the high of the candle, when we mark that equilibrium level, it's not as clean because price opens up down here, not all the way up here. So I would personally, I don't find that level as attractive. So I'd be looking for those levels to be respected to the upside. We can look on our RTY as well. On RTY, we had that bullish day, right? All of these days, we took out that liquidity, so I would be looking for price to trade up higher off of this day close, but I want to be looking and be ready to watch how price reacts to the equilibrium level, because we could just be trading higher into the equilibrium and then moving on to a different level or phase of price's delivery. But we'll see. So that's going to be the 0.5 level where I'd like to see the daily wick form and then trade higher into that equilibrium of the range. So we'll see which we can catch it on. Here it looks like the range is going to be totally different. So for me, in my idea is that every market, YM, ES, NQ, they're all going to try to they're going to need to balance out, so they got to go to equilibrium. And so I want to trade the assets that's going to be the furthest away from its equilibrium, right? The respective equilibrium. I want to trade the asset that's going to be the furthest away. All right, I'm just cleaning up some shit that needs to be right. All right. Who authorized all of these first presented fair value gaps to be like locked on my chart? What the fuck? All right. So I would be looking for, like, see how market's already at equilibrium pretty much. Well, that means that going into tomorrow, we don't have that much of a range to trade. Well, on NQ, it's probably going to be a relatively similar story where EQ is right around this range. So that's pretty much that. Going on to CL, on that daily, I was expecting this whole entire level to just be swept, using this as kind of like a low resistance liquidity run, right, off that trend line level. But we haven't gotten that yet. I'm still anticipating that going into the upcoming week. I was assuming that here, but we cruised that level, right? You can kind of tell as price trades into equilibrium how it's going to react. You can see here, price on that daily candle closes below in the discount and then uses the previous candle's range to displace lower. So obviously looking off there, you wouldn't be using this equilibrium as something to enter on for longs, but actually more for shorts. Yeah, that inversion fair value got failed, so that's what that is. I would just be watching here. We didn't sweep the liquidity or anything, so next day I would be looking for this fair value gap to hold prices expansion. Yeah, that would be my next target. Moving on to, we don't need to be on RB. Let's go on to gold. On gold's daily chart, a huge, wait, we got to see this. All right, what? I don't know why we have that big of a volume imbalance when prices like that. I would be pretty bullish here, right? If we're trading in, if this is the range that we're trading in right here, I'm going to be bullish off of this level. Let's delete some shit off my chart. Oh, well, not that. That was the whole thing, right? So we're trading in the above the equilibrium level right now of that range. So I would be looking for prices to use bullish fair value gaps to hold. So we would be looking for this fair value gap going into tomorrow to create the low of the day. We'll check back up on these predictions in a little bit, but on this 4-hour chart, I would start to expect something down into this range. But looking at that, it's like a 20-point move, so it won't be too unrealistic that might use most of the daily candles range. But looking at it, we have big wicks right here. This is a accumulation that price was in last week, and we're taking out the buy side level of that. And yesterday we took it, and today we're trading into it. So we can see how price may expand to the upside from there. But going into that, I would be watching, which asset would I be watching? Well, more would be watching YM, right, for YM's expansion to the upside. But we would have to make sure that something really works. Okay, so we have a change state delivery here. I'd be looking for this level to hold, right, looking for these next hour candles to sort of create the low right here and then displace higher. So we'll see. All right, bye.